Hello guys, welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Today is a very important day, and that's because in approximately 2 hours time we are going to get the CPI and the core inflation reading, and this is going to tell us whether inflation's downtrend is continuing or whether we're going to perhaps see a slight uptick. And this is very important as well because this is a very key piece of data that the Fed has continued to pay very close attention to over the past 6 to 12 months with regards to their interest rate hikes, etc. So all eyes will be on that CPI reading. Just quickly looking at the S&P 500, we're trading at around 4,115. And what's really interesting going into this CPI reading is that I analysed some of the CFTC reports that are posted on Friday, and I looked at the hedge fund positioning with regards to the S&P 500, and at this moment in time, hedge funds are the most bearish they've been on the S&P 500 dating back to 2011. This means that they're holding the most amount of short positions in the S&P 500 since the end of the 2008 to 2009 financial crisis. Now this, would probably indicate to many people that this is very bearish, and yes, it is. It's basically saying that hedge funds predict that the S&P 500 is going to trade lower, but it can also be very bullish as well, because if we do get a inflation reading, the CPI reading come in below the 5.1% estimate, then this would potentially lead to hedge funds having to cover their shorts. This is called short covering, and this is what can typically form or cause a very sharp rally towards the upside, because these hedge funds are going to have to hedge their shorts, meaning that they're going to have to buy the exact same equivalent to the amount that they've sold, and this is what can cause some very sharp moves towards the upside. So this could potentially spark a move up towards 4,200. Again, if we broke above there, then we're likely to go and target that August swing high all the way up at 4,300. If for whatever reason the CPI reading does come in way above 5.1%, then you can expect to see the S&P 500 give up a lot of the gains that we've seen over the past week or so, and we could potentially see a move back down towards that 0.236 fib area, as well as the 50 and 200-day EMA, which sits just at around 4,000. If you'd like to be part of my signal team and receive my signals as well as my live updates as we go through to the CPI reading, then please do not hesitate to scan this QR code on your screen. It will take you to my website where you can then subscribe to my service for a very small joining fee of $29.